Good evening, guys. You can see time is around 8:10. Let's look at today's Nifty 50 as well as Bank Nifty data analysis. First, let's look at Bank Nifty, guys. You can see, as yesterday, there was a huge down rally, a huge bearish momentum, and further selling towards the downside as occurred as the market gapped down and consolidated towards the sideways throughout the day. And this is the day's pivot levels. This is the 200 moving average. This is the weekly pivot levels. And this green color line is the middle of the first candle. This is the 5-minute zone, the light green color. What you can see here is that the market tried to break towards the upside, but faced some sort of rejection candle over here. So you can see once the market grabbed this liquidity and closed below this zone, you could have entered long position, short position, keeping your stop loss just above that candle, because 9 and 21 moving average also is in confluence, guys, and you could have targeted towards this level or this swing towards the upside, or in case if you consider this swing the common point between this to the common point between this, I could have targeted to the 2.68 level over here, or you could have tried as long as the market would have continued towards the downside. But what we need to, in case if you have missed out on this trade, this what you can see here is that you can see clearly market broke this structure with a fair value gap, and you can consider this to be a break of structure, and again market retraced back. So if you try to plot the common point between this to the common point between this, you can see the market retraced all the way to 0.38 level over here. This is where the market retraced and continued further selling. So if you try to plot the Fib extension levels, the common point between this to the common point between this to the common point between this, you can see the market faced rejection from the 0.5 as well as the 0.6 zone over here. This zone is very important, guys, because you can see here is where the price took support. So this is the 0.5 as well as 0.6 zone. You can see rejection of price from this candle, and after this kind of rejection you can see market clearly broke this high as well, clearly changing the market sentiment from being bearish to bullish, and you can consider this to be a chalk formation. And you can see after this the market formed a huge bearish candle towards the downside, but was not able to hold price and continue further buying. And in case if the market sentiment would have been bearish, the market would have broken this low. But here you can see clearly the market couldn't cross this low and continued further towards the upside. So if you consider this swing over here, which actually formed shock, so if you consider the common point between this to the common point between this, you can see price taking support from the 2.36 level, which I have previously mentioned to you guys in my old videos. Like whenever price after this kind of chalk formation and when it retraces, there is a high chance that the price might take support from this 0.23 level, and you can see how the market took support over here and continued further towards the upside. So in case for you to take long position, if you try to plot the anchor gap levels here, you can see this zone over here, guys, where the market clearly broke this structure and price retraced to these 50 levels. So you consider this impulsive momentum here, and the market faced rejection from here and continued further. This candle which actually broke this 9 as well as 20 moving average, the anchor gap level as well as the daily gap level, this candle, guys, this is where you could have easily entered long position. Or in case if you have waited for retracement, you can see clearly the market broke structure towards the upside here. This indicates a clear break of structure. So if you try to plot the retracement of this, the common point between this to the common point between this, you can see the price retraced all the way to 50 levels over here. This is where the price retraced, guys. This is the 50, and you could have targeted towards the upside after this kind of rejection of price. And in case you can see everything is in confluence guys here. So if you try to plot the fib extension levels, the common point within this, to the common point within this, to the common point within this, you could have targeted all the way to 1.68 level, the 100% move over here, or you could have targeted the midway between the 1.6 as well as the 100% move. If you consider this ring over here, you can see guys how exactly the market came all the way to the midpoint between the this zone. This is 0.5 level of the 1.6 as well as the, look at this guys, here is where you could have targeted your positions, or you could have waited till the market would have reached the to reach phase rejection from 200 moving average. But here you can see after this dodgy candles and price trying to pierce, and once if this low has been broken, you could have exited your position. Or in case after this kind of retracement guys, you could have plotted the fib levels. Once if this fib level is being broken, the mid of that level is being broken towards the downside, you could have changed your perspective. But here you can see clearly the market formed chop over here and changing the market sentiment from being bullish to bearish. And in case if you try to plot the anchor wave up levels here, you can see the price clearly broke this chop, and here it retraced. So if you try to plot the fib levels here, if you try to plot the common point within this to the common point within this, you can see here the price formed a huge bullish candle over here, but you can see clearly market was not able to cross the 0.38 level over here, where the market faced some sort of rejection. So in case if you try to plot the fib extension levels, the common point within this, to the common point within this, to the common point within this, you could have targeted the 100% move here. This is where you could have clearly targeted your position with the 100% move. Entering short over here, or in case after this low is being broken, you could have entered guys. But for better confluences, I am telling you, you could have entered here, keeping your stop loss stable and targeting all the way to 100% here. You can see after this candle, a huge bullish engulfing candle formed, and market rallied towards the upside. So let's take this anchor wave level out. This anchor wave is there, and you can see here a huge bullish engulfing candle formed over here, which engulfed the previous two candles, and you can see price rejection from these levels. But what we need to see, if you consider this whole thing as one swing guys, or what you can see is this order block level as well. Okay, what you can see clearly the market broke this level, and the last up candle which broke this level was, you can consider this, you can see price came out the well towards the order block level, and price formed a certain pattern over here, you can see, which clearly signifies bearishness. So you could have taken short position here, and you can see after this break the market retraced to 50 levels and continued further selling towards the downside. But this selling guys was not impulsive momentum as when compared to this momentum over here. You can see here the impulsive momentum towards the downside was mitigated over here with this retracement, and after retracing there wasn't much impulsive momentum with fair value gaps. You can see a balanced move, clearly indicating the market is not bearish enough after this kind of huge momentum towards the upside. So if you consider this momentum towards the upside guys, so if you consider the common point in this to the common point in this, you can see how the 0.5, the 550 levels is acting as a major support over here. This is the 550 levels where you can see the market is consolidating here, and here it acting as a major support over here. Or in case if you try to plot the anchor wave up levels at this swing low, you can see after this break of this candle, huge bullish momentum candle guys, which actually faced rejection from this zone, broke the 9 as well as the Indian moving average, the anchor wave up level as well as the day wave up level. So in case if this failed, you could have easily taken long position of this candle itself guys, keeping your stop loss just below that candle itself. And if you try to plot the fib extension levels, the common point within this, to the common point within this, to the common point within this, the first target you could have targeted the 100% move over here, This is where you could have targeted, and this is the 100% move, guys. And the second target you could have targeted all the way to 1.68 here. Look at this, guys, how the market came all the way, grabbed this higher base high liquidity and continued further towards the downside. Look at this, guys. Sometimes the market might face rejection from these levels, guys. When the price reach the 5 minute zone or the mid of the first candle, there is a very good chance that the market might face rejection and continue further towards the downside. But what confluences we can choose here is that the moving averages, as you can see how these moving averages, the 9 as well as 21 moving average, forming some kind of support over here, and the price is not able to cross this moving average. And you can see price, in case if this momentum would have been strong or this zone would have been very strong selling pressure, you could have seen some kind of impulsive momentum candles which fair value gaps or imbalance breaking this low, guys. But here you can see the market moved in a very balanced way, and you can see this momentum towards the upside, clearly indicating very bullish momentum. And you could have tried all the way to 1.68 level. You can see after this kind of momentum, the market faced rejection and closed below this retracement candle, clearly indicating some sort of bearishness. And you can see, guys, after this candle, the price was not able to hold and clearly broke structure, forming a chop over here. Clearly, the market closed below this level, and you can consider this to be a chop as well. So if you try to plot the anchor wave levels of this side, you can see this after this chop, the market tried to retrace, but here it formed a bearish engulfing candle. Or in case if you try to plot the fib levels here, the common point and the high to this low, you can see the price rejecting from this level. This is a 450 level, guys. Here is where the price rejected. And you can see clearly after this kind of rejection, the market continued towards the downside. So in case if we try to plot the fib extension levels, the high to this low to this side, as all swings are in black color, you could have targeted the 1.68, the 100% move, or you could have targeted all the way to 2.68 level, or you can expect a downward momentum the following day as well. So as the overall sentiment of the market is being bearish, so you could have targeted the 1.68 level, or as long as the market crosses the 21 moving average. You can see here after this huge sell-off, you found a bullish candle here and price rejecting from this level, so you could have exited your position here, guys. I hope you are getting what I'm saying. Start position here, guys, keeping your stop loss with stable candle and targeting all the way to this zone. This is how you could have traded. And after this kind of huge break of this candle, after these fib levels here is where you could have taken long position, or it was better you could have taken here itself, and keeping the stop loss just below that candle and targeting the 100% or these slides. This is where you could have targeted. And you could have targeted this down also, guys, but for better confidence, I'm not using this one. But you can see 1, 2, 3, 4 trade setups, guys, today, where you could have clearly taken short trades and long as well as short as well. This is about Bank Nifty. Now let's look into Nifty 50. As today was Sensex expiry, you could have expected some kind of manipulation in market. This is the day's pivot level. This is the weekly pivot, weekly anchor wave level, and this black color line over here is the day's pivot level. The green color is the mid of the first candle, and this is a 5-minute zone. You can see the market clearly gapped down, guys, clearly showing market sentiment to be bearish. You can see a clear breakdown of around 90 points, and you can see after this huge gap down, the market with no hesitation clearly rallied towards the upside with no downward sentiment only, guys. This is only to trap all those sellers who might have entered here. You can see all those sellers got trapped here, guys, with this huge momentum towards the upside. You can see sellers over here might have piled the stop loss here. You can see the market targeted all those sellers, and Only here you can expect some kind of buyers entering the market. But as yesterday was expiry date, expiry day of Sensex, as both Sensex and Nifty 50 all moves in same direction. You can see this kind of movement as you cannot actually trade this kind of markets. There is no clear price action being formed here itself. So in case if you try to decode this traders, so you can see clearly the market is trying to show some kind of pattern over here, and you could have expected some kind of rejection from these zones or yesterday's close level and or the 200 moving average rejection. But here you can see everything failed, guys. What happened here is that you can see clearly the price took support, found a bullish engulfing candle, went all the way to 200 moving average, rejection of price here, but you can see clearly the price was not able to close below this low, and you can see after that a huge bullish engulfing pattern, breaking the 9 as well as 21 moving average towards the upside, and you could have plotted the fib levels here, the low to high of this candle over here, and if you plot the fib levels over here, this is a 450. And in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, you could target the 100% move, or we could have targeted the mid of the, we consider the mid of this 0 1.6 as well as the 100% move. This is where you could have targeted, which I have already mentioned to you in Nifty 50 as well. So the long position here is after this kind of huge bullish candle, keeping a stop loss just below that candle and targeting the 100% move. This is the first target, or in case if the price is holding or price taking support from 200 moving average, you could have trial all the way 200 moving average, but here you can see the market is all the way to the 0.5 as well as the mid of the both zones. This is one trade where you could have taken as of my knowledge. And you can see here is where another break of structure. Clearly market broke this high as well. So after this the market retraced here and continued further towards the upside, breaking this high as well. This is another break of structure, but here you can see the market clearly broke and formed a huge momentum towards the downside. But here again the price took support and continued further towards the upside. There isn't clear price action, guys. If you try to plot this impulsive momentum also, if you consider this low to this high also, you can see price taking support from 50 levels over here. But you can see this consolidation is where it's important. But here you can see this consolidation over here, which clearly market broke, changed the sentiment from bullish to bearish. But we could have waited for retracement here, expecting the market to continue further after this kind of momentum. The market might retrace here and continue further like this. This is how usually the market behaves. But here you can see the market again rallied all the way and broke this high. So we could have expected upward momentum only. So we could have waited for retracement and continue further towards the upside. And here is where the price rejected from these levels and continued here, showing clear signs of bearishness. But you can see this support over here where the market was not able to close below these levels and the market rallied towards the upside. And you can consider this momentum over here is not strong enough, guys, when compared to others. And you can see this kind of rejection candle and price trying to break this zone, guys. You can see clearly the market broke this high as well with fair value gaps. And the price rejecting from these levels. Here you can see that clearly the market sentiment is bearish only. You can see this kind of pattern formation over here and even this kind of pattern formation. But here you can see rejection of price from these levels and price trying to break. So if you consider this swing over here, guys, the whole swing over here, so the common point between this to the common point between this, you can see price taking support from 350 levels. This is where the price is taking support over here, or you could have considered the 200 moving average support over here. And in case if you try to plot the anchor wave levels of this swing here, you can see once if this level, this candle which huge momentum broke the 9 plus 20 moving average as well as the anchor wave levels and price taking support from here, we could have entered long position after this kind of candle rise, keeping a stop loss just below this candle itself and targeting if we try to plot the full extension levels, the common point between this, to the common point between this, to the common point between this, you could have targeted all the way to 1.68 level. The first target was this size, the 100% move, or you could have targeted all the way to the 1.68 level over here. This is where you could have clearly targeted your positions. So that's how you could have traded. And you can consider this kind of retracement where price taking support from 21 moving average. So if you consider this huge momentum towards the upside, the common point in this to the common point in this, you can see price rejecting from the 0.38 levels over here. This is the 0.38 levels where price getting rejected and continuing further bullishness. So if you consider this swing over here, the wave extension levels, the common point in this, to the common point in this, the common point in this, you can always focus on the 0.5 as well as the 0.6 zone over here, guys, where there is a lot of profit booking over here. You can see all those buyers who might have entered here, might have holded here and might have booked profits over here. But again, you can see the market rejected from these levels, and here you see this rejection of price from the anchor gap levels as well as the 200 moving average and continuing further by bullishness. I think today though there is only two setups, guys, that you could have easily taken. I hope you're understanding, guys. It's better not to trade on this kind of markets, but if you are trading with a very minimum risk to reward ratio, you should trade, guys, because you can see this kind of moment you can't actually make profits. You could have made a profit if you might have bought it in the morning expecting the market to go higher, but I think only institutional buyers might have entered such kind of markets. Like no one can expect that after a huge gap down and the price trading below the 9 plus 20 moving average as well as 200 moving average, expecting the market to go higher. This is quite opposite to price action. But here you can see institutional buyers, institutional sellers, everyone are entered here targeting all those retail traders who might have entered short or short here, and taking out all their liquidity. I think with this kind of huge momentum, those people who might have shorted might have exited their positions, and we can expect a huge downward momentum tomorrow and expecting a sell-off tomorrow, guys. As the market might continue its initial trend as towards the downside only. So you can expect the market to go down itself, guys, from tomorrow and breaking these lows also. That's it about my trade analysis, guys. I hope my videos here is trying to help you. If you really find my videos helpful, guys, please like, share and comment. Please share with your friends and family in case you find that even they gonna benefit from my trade analysis, and I will be posting all you live trades, guys. So I will be showing you how you need to exit your positions, how you need to take trades during the live market. So please support my channel, guys. So it will be helpful for my YouTube community. That's it, guys. Thank you.